Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Friday, June 6th. Happy Friday to all. Well, there's two-sided trade overnight. However, right now, mostly lower trade across the ag space with bean oil, the only commodity in the green, trading about 50 points higher. Beans right now are down 3 to 4 cents, meal off $2. Corn down 2 to 3 cents with old crop again losing on the new crop. Wheat prices range pretty much from unchanged in Minneapolis to 1 to 2 lower in Chicago and Kansas City. A bit later this morning, we'll get the April payroll data. Job growth is expected to have slipped back to about 125,000 last month, with the nation's unemployment rate holding steady at 4.2%. Speculative traders yesterday, they bought about 2,000 contracts of wheat, 4,000 contracts of corn, and roughly 6,000 contracts of soybeans, while being net sellers of a couple thousand contracts in both meal and oil. Spot board crush margins did just that. Yesterday, they were crushed nearly 9 cents to $1.15 per bushel, the lowest in 3 months. I would not expect to see any major changes in the speculative trader positioning with this afternoon's CFTC Commitment of Traders report. Biggest change likely to come in corn, where their short position is likely swelled out to about 130,000 contracts as of Tuesday, while the net long position in bean oil likely down to about 35,000 contracts. A day after President Trump and Chinese leader Yi spoke on the phone, now we'll await to see when the next high level of trade talks will be scheduled. We're also sensitive to any other trade announcements. U.S. weather mostly favorable, however, too much rain across southern portions of the Midwest and Delta region over the next week may prove troublesome for late developing winter wheat. Temperatures to remain in a cooler than normal pattern into about the early and middle part of next week before warm up begins across the West. A little bit of warmth is exactly what this crop needs in many areas. However, markets will be on guard for any indication that a hot, dry pattern is setting up for the middle part of summer. Inside trade for July corn overnight, as it remains at about a 10-cent discount to December. December traded to a new 2-week high overnight before pulling back a touch. The Buenos Aires Grain Exchange, they place Argentina's harvest at 44%, up 3% for the week, and above the year-ago pace at 35%. They kept production unchanged at 49 million metric tons, just a touch below the USDA estimate at 50 million metric tons. Inside trade for July beans as it hovers near its 100-day moving average at 10.50.5. No beans traded to a new high for the week before pulling back. Inside trade for July meal. July oil hovers near now above 47 cents. We're still awaiting decision on RVOs. Pretty uneventful trade in wheat overnight. Argentine plantings, they advanced 13% in the past week to 24% complete. Recent rains across the northern plains has led to drought readings plunging now in the last week, down 10% for spring wheat to 19%, while Durham area in drought, that crashed 38%, however, still a lofty 41% of that cropland area in some form of drought. USDA report next Thursday, where they will provide an update on the U.S. winter wheat production. USDA has raised winter wheat production in the June report every year now for the past 10, so I would expect a little bit higher figure there. I'm going up about 10 to 20 million bushels, zeroing in on 1.4 billion. Thanks for listening, everyone. Have a great Friday and a great weekend.